Top three things in my notebook this morning. Number one, the U.S. dollar ahead of Mrs. Yellen speaking in front of Congress. Number two, gold. And number three, the 10-year bond yield. So first on the dollar is obviously attempting to front-run some type of proactively predictable behavior from Mrs. Yellen. So we'll see if, in fact, she is the mother of all doves. And the way that that would play out is that the dollar would go lower, and things like commodities and gold will go higher in the face of falling interest rates. Now, not to be confused with a growth signal. That is a growth slowing signal, and we're going to stick with that call. The second point, of course, is gold, which is just a follow-on to that point. Gold hits a new high, up almost 7% now for the year to date. Again, not signaling growth. Again, gold is the antichrist of growth. So again, as rates fall, gold goes up. As rates fall and the dollar falls, gold goes up even faster. So again, if you're long of gold in gold terms and you are short of the S&P 500, in the S&P 500's terms, you're having a fantastic year. Finally, the 10-year bond yield continues to make a series of lower highs as it remains bearish and below at Hedgeye trendline resistance of 2.80%. So really, I don't particularly care what she says. I care more about the reaction to what she says. And if what she says has anything to do with forward rate guidance, which is, of course, not what the Fed's dual mandate is, that could be bearish and most likely will be bearish for bond yields. So, again, that's why we bought bonds yesterday in terms of where they've pulled back to in the most recent couple days. So those are your top three things.